This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Going to give you a stock market update. Although we did have an abridged week, I do want to maintain continuous updates on the market, make sure we're staying on top of things, and actually something important developed this week. So we're going to go through that. Let's go ahead and get started. First, if you have any interest in learning more about some of the techniques I'm going to discuss, especially when I get into the trend and momentum analysis, I would suggest taking a look at the book. It's at rabilstockresearch.com/book. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, as always, we're going to start with the market conditions up on the left here because something pretty important has developed. Now, I know we've been up in this range on the sentiment, which, up in that 43% range, but we have now jumped again, a pretty big jump this week, up to 46%. And so up here we were around, so just to give you an idea, when we rallied up here, we were at around 48, dropped down to like 26, 27, down to this point, quick drop in a bull market that drops it into the 20s after being really overdone, then we want to look for a move to the upside. But now we're back up to 46%. And while that's taking place, the overbought condition is at 87%. We're up into this upper region. Anytime you get closer to 90, you should be a little bit more in tune or watching a little bit more closely for some kind of a pullback. Now, we've got Friday, and by the way, I hope everyone had a nice 4th of July. But one of the things I want to mention here is that we've got this one day left of the week, quiet week. It's not a lot of participants working full time, at least not in the institutional environment from my clients, based on what I've seen. So I wouldn't expect anything significant to take place on a Friday, but I would say into the following week, I think we need to be a little bit more cautious about how things play out. So just be aware of where we're situated. From a short-term standpoint, we've gotten a little excessive, too many bulls. We're up to like 62% bulls, I believe, and the difference between the two is at 46%. Again, that's a really big number, historically speaking. I've been using this indicator, this investors' intelligence numbers, for a very long time. So I know that we're at a point now where I think we should be on the lookout for some kind of a dip. We're pretty far away from a weekly standpoint, away from the 18. I'm going to get into that along with all the other time frames in a second. Let's just cover. So let me just go through this. So on the daily chart, the volatility is back to bullish. I'm going to show you that in a second, why that's the case. We're on a weekly basis, we're neutral. And then both the trend and the momentum for all three time frames are positive at this point. All right, so let's start looking at the actual charts themselves. Let's start with the this black line is the average true range of the S&P on a daily basis, okay? And then what I've done is I've overlaid an 18 MA on top of that. And that is actually more important to me than the line itself because we get a lot of movement in the line. Now, typically what I'm looking for is some kind of a 1, 2, 3 reversal where we get a trend line break and then kind of reverse to the downside, or the other way around where we reverse back to the upside when I'm looking at the line itself. But what can be helpful is just watching the slope of this moving average. And when we're below a declining moving average, that's a bullish sign of declining volatility. Declining volatility is a better environment to be a trader. So the shorter term type trades, where the weekly might be the higher time frame, daily would be the lower time frame, or hourly, something like that, is what I would be more focused in on at this point. Because on a weekly basis, and I'm going to actually expand this out for a sec. On a weekly basis, we still have a rising moving average. Now, we're below it, and that's why it's neutral right now, okay? But what I'll say is that we need that moving average to actually turn down. We haven't had that happen yet, and I'd actually feel a lot better if we got some kind of a dip or pullback closer to the moving average and saw this roll over, okay? Meaning, if we're going to get a drop, if it's not violent, if we get a big bar, then this thing could pop right back to the upside. All right, so we need to be aware because of where we're situated in the short term, right? In the short term, we're We've got a very overbought condition on the RSI 5, and we have an extreme reading for the bulls and the difference of the bulls and the bears right now. All right, so somewhat concerning. Now, I do like to scroll back every now and again and just look at where the trend originated. And where I look at this is we can see back in 2012, 2013, I think this is where it originated, because what we've got is this red line is showing the quarterly moving average. The green line is the 18-month line. Okay, and then the magenta colored line is the 18-week. So what I'm looking at is where all the lines kind of come together and then start to expand. That's the origination of the trend. And you can see that started right there in 2012. This is where, when we're looking for opportunities from a long-term standpoint, this is where you just press the envelope. You get as many long-term ideas that look attractive and have good momentum characteristics I'm going to discuss in a minute, because we know it's early in the trend. Now notice what's taken place. The 18 has slowly kind of worked its way. Now it actually went through another correction. I'm not saying we're at a point where it's about to turn to the downside, but we're nowhere near where we were at the origination of the trend. So we can still play the game, right? I mean, but if this 18 keeps climbing away and this keeps climbing, so the farther apart these lines get, the more risk we have. And that's in the bigger picture. All right. And then when we look at the price action, you know, the farther it gets from the moving average, the more we think we should get some kind of a dip or pullback. All right. So I did want to cover that. I do like to look at that, you know, every now and again, maybe like once a month, just to make sure we're covering it. All right, let's look at the different time frames, because the one thing that I will say is that while it's not excessive to the point of feeling like we're at some kind of a climax, we're definitely stretched away from the 18-month line. We're getting a little too far for my comfort level. And if you notice, we had a really good month, okay, and then we had another really good month last month. So we've had two back-to-back good months, and now we're starting a new month here. And if we take out the high of that and then come back down through the open for this month, right? So that's this line right here. That's the open. If we come to a new high and then come back down through that, then I'm sort of thinking that we go through some kind of a correction phase. So I like to look at this and zero in on what's taking place in the short term, because look at the way this is developed. You see how there's separation between the low of this month and the 4? There's only one of two ways this is going to play out. Either we're going to come back towards this line, or this line is this market or this bar is going to be so strong that this is going to cause this line to actually go up and catch up. Okay, because the line is actually being influenced by the close right now. So the stronger that close, the faster this line will move up. So we know there's some separation here. We need to be on the lookout as this breaks to a new high. And, you know, I think be watching it kind of close for a move back through the open. Something to just keep in mind, just based on the fact that we've gotten a little too far away from both the 4 and the 18-month line. All right, momentum conditions are good. And I'm not saying there's anything negative here other than the fact that we're getting a little stretched in the short term. All right, especially based on where we sit from a sentiment standpoint and the RSI 5 on the weekly. All right, let's look at the weekly chart. So now the weekly is starting to get a little stretched. It's nowhere near, I don't think it looks quite as extended away from the 18 as the monthly, but it's getting a little bit stretched away. Now, notice we just came down and touched, let's just zero in on this so you can see it. You see how we just touched the 18, and this is kind of cool the way this played out. We opened, we tried to drop down below the 4, and then we came back through the open, all right? So for the week, I think that's actually a pretty good week. Now, if we come to a new high, we want to be watching how we trade around the open for the week as we're interacting with the 4. Something to keep in mind. We had two back-to-back kind of tails formed, but the opportunity to roll it down really didn't have any follow through, and we came back up through the open. So that's actually a bullish sign. And I think if you learn these kind of short-term techniques, I talk about this in my courses, but you know, learn these techniques of how we work around the 4, and I think it'd be really useful. We have a rising 4 here. We tried to break it and then came right back through the open. It's not the type of month where you'd expect any real down move, okay? And when you close like this, if we would have opened up here, right? And then gotten a little bit of a push to the upside and then came back down. Then I think the opportunity for a decline or something like that, I think it increases a little bit more. So just kind of learn some of those techniques. I think they can be helpful. But right now, again, the momentum conditions I think are pretty good. Don't get too wrapped up in the fact that we haven't confirmed on a momentum basis here. I would need to see a big red bar here to signify that this divergence, this potential divergence, has some meaning. All right. We are in that window, so I'm not saying it can't happen, but I need a little bit more evidence, maybe another push to a new high next week, and then a reversal bar, kind of like what I'm talking about on the monthly. If we get that to happen on the weekly, that would be like an early warning side of a potential little divergence developing here on this time frame. Now, the reason why I'm not doing any, I'm not causing or calling for any real panic type move on the weekly chart is because what happened on the daily. Look at how we came down and found respect right at the 18. Look at how these are rising at about the same rate, and look at how strong the ADX condition is with no sign of sellers yet. Now, we know that can change on a dime. So if we come in here, have a good day, and then starting next week maybe or something like that, have a big red bar with an expansion in volume and red DI making a higher high here, then I'd start to get a little bit more worried if we get into some kind of a contraction phase based again on where we're situated with this sentiment and where we are with the overbought condition, right? Those are secondary indicators to me. They're not primary. I'm not going to make a decision based on them. I'm going to make a decision based on what's taking place on this short-term daily time frame, or if we saw something develop on the hourly. But as we go through and we do our weekly work, right now this doesn't look very bad at all. We're getting a new high in green DI, showing improvement. The volume pattern looks pretty good, and this was actually a pretty nice little consolidation we're breaking out of. So we would need a pretty abrupt reversal, and I certainly don't expect that to happen on Friday where not a lot of people are going to be around. So I wouldn't expect that to happen. I mean, anything's possible. We could wake up, and have, I'm not doing this Friday morning, but we could wake up to Friday morning and have this be a really violent move to the downside, but I'm just not expecting that. All right, stay in tune with the momentum and the trend on this time frame and this time frame, though. All right, because of where we're situated in both the sentiment and the overbought condition, I want to watch these a lot more closely than I was maybe a couple weeks ago or something like that. I think we're at a point now where we should be a little bit more on the edge of our seat from this standpoint. All right, have a great weekend, and we'll see you next time.